Hello, welcome to Sid Academy, where accounting is made easy. Now, before we start the work, I would recommend that you go to www.sidsacademy.blogspot to download the question and solution to the question we are about to solve. So let's get started. The balance sheet of F&Q Investment as at 31st January 2014 to 31st May 2015. We have current asset, building, equipment, less depreciation. We have vehicle, less depreciation. We have current asset, inventory, account receivable, bank or cash, account payable, overdraft, dividend owing, tax owing, long term, and then we have our capital and reserve. The trick here is that at the end, our cash balance or whatever we'll get should be equal to this figure, and if it's not, then that means there is something wrong somewhere. So in accounting, the first thing that we do is that we write the name of the company, which is F&Q Investments Limited. Then you underline it very nicely because it's going to score you points. Then we are going to we are calculating cash generated from operating activities. Please note here that we are using the indirect method. So here we are going to find for the probate, add depreciation, stock, and then we'll get cash generated from operating activity. So let's get started. The first item that we'll look at is our retained profit. So you write retained. Let's get our Ghana cedi sign here. Then you underline retained profit. Now to get the retained profit, this is the retained profit column. You subtract the previous profit from the current profit. So we are going to get 875 minus 775, which will give us 100. The next item we are going to look at is we add dividend. And please note here that the dividend, we use the previous year dividend. This one, we use the previous year dividend, which is 70. And we add a 2 to give us our net profit of 107. We are going to add our interest. The interest in the question is 5. Then we'll add our tax. Our tax, please also note that the tax, we use the previous year's tax, which is 40. So if we add 170 plus 5 plus 40, we are going to get 215. This is what you call EBIT or probate. This is earning before interest and tax, or profit before interest and tax. So they've answered the A part of the question. So we are adding the second part to get cash generated from the operating activity. Then we send it to our cash flow in our second video. So the next item we'll look at is depreciation. Now if you look at our balance sheet, he gave us 2, that is equipment. So the equipment, you go to the depreciation column, you see that the current year is 700 and the previous year was 500. So you subtract the previous year from the current year, which is 700 minus 500, which will give you 200. You do the same for vehicle. The current year is 300 minus the previous year. Vehicle, the vehicle, the depreciation is 250. You have 250 minus 150, which will give us 100. Then we go to stock. Please, this portion, there are tricks, because if you don't get it, you spoil the whole thing. Now there's a general rule which I have created. That's a trick I use. Anytime I'm doing stock and the current year goes up, I'm going to subtract. So that means the final answer that I'll get will be minus. Example, let's go to our inventory. Our inventory here, the current year is what? 430, and we are taking our previous year, which is 400. The normal circumstance is supposed to be 30, but because our current year is up, the rule says that you subtract, so the 30 will be in subtraction. So we subtract stock, which is 30. Then we go to our debtors. So let me bring the stock figure 430 minus 400. Then we go to our debtors. The debtor figure, we have 470 minus 490. As you can see here in the debtors column, the debtors column is account receivable. So in case you don't see debtors, it's the same as account receivable. So we sort 470 minus 490. So the principle says that if debtors, if the opening, the current figure is higher, that you subtract, but if it's lower, we add. So here, if you take the difference, that is 470 minus 490, we are going to get 20, but this 20 is a positive 20, so we put 20 here. Then we go to our creditors. So please, this is 30, this is 100. I hope you can see it. Then we go to our creditors. So the creditor, we have account payable. So in case you don't see direct creditors, we call them account payable. So you subtract the 270 from the current year. So we have 260 minus 270, and the principle also says that if the amount goes up, we subtract. If the current year goes down, so this one is down, so we subtract, which is going to be into bracket minus 10 minus 30. So if we add 215 plus 200 plus 100 minus 30 plus 20 minus 10, we are going to get 495, and this is the cash generated from operating activity. This is the figure that we take to the cash flow. So in our next video, that's part 2 of this video, we would continue with the second question, that we are going to find a cash flow statement. So thank you, and then you can watch our second video to get a solution, the B part of this question.